So there's that previous week's low swept. That's what we wanted to see. And now we're going to go ahead and study what we do at this price point now. But inevitably, someone watching, they'll be like, "Oh, wait a minute, dude. This was clean. Why you should have been selling this?" Okay, you can sell that. Go ahead, sell as soon as it goes above these highs. But then you better have a wide stop loss above this new week opening gap, right? And if you made money on that, that's cool. That's great. It's just simply not my model, and I'm not going to execute something that's outside of my model because of social media, outside speculations, none of that. And see the sensation taking place right here, like this kind of fractal 1 minute trend line sensation taking place right here. I don't really like that. I would like to see that be upset eventually, and we would take. And like I was speaking on in my Twitter space, it kind of just goes back to waiting for kind of us following. We're not trying to beat the markets here. We're following the fingerprints and footsteps that they leave us. Order block. And with this change of the state of delivery, with the time of day where I'd like to see if that can't now upset this trendline sensation taking place right here. So that would take us above the buy side right here on NASDAQ. Okay. And then stop loss would be widened below the low. So 2 micros, risk is $100, and then we're aiming for opposing buy side. So alright, well, I'm going to go ahead and close this here, and then we'll just wait to see what it does. It obviously wants to drive into a new low. What we're seeing here on NQ, we just had to wait for more information and get that later entry. Above this swing high, we'd be looking at this breaker here and looking to see if that can't act as a launching pad above the little trend line sensation taking place here in the buy side. But whenever we're looking at scenarios like this, the key here is, not to say this is absolutely going to pan out right now, but the key here is we're looking at this down close candle, right? So this will be a bullish order block. We see that. Drives us down here. We shift above that, okay? So we have a change in the state of delivery initially. But the key is we look at an opposing, when we have an opposing order block like this on lower time frames, we look to see that being closed above the midpoint, ideally. And that would upset order flow after a change in state delivery, and we have an opposing reasonable target. That right there is a high probable trade that you'd want to be taking. Don't get me wrong, this isn't breakout trading, okay? This is waiting for displacement. And I don't want to say market structure shift, because I really don't need market structure shifts to take my trade, okay? It goes way deeper than just, oh, we have a market structure shift on the lower time frame. All right, cool. I'm going to get in long and target this high. Much deeper than that. If it was that easy, I mean, everyone would be an amazing trader, and then we'd view this as a breakaway gap. We like to see this stay open until we reach the buy side. And then stop loss is going below the down close candle. And then obviously sell limit's going up here. 20 handles, and we'd be aiming for around 50. So watch this. Value gap here. Would I add more in here? No. Why would I do that? There's no need to add more risk onto this. I'm already content with the leverage, okay? Alright, there we go. There is 58 handles. Obviously everything called live. There's no backtracking or anything. You guys saw me take this small paper cut $80 loss, and then boom, right there we took the 56 handles. So